Here's some of the things that a mortgage lender is going to look at to get you pre-approved. The lender is going to take a look at 2 years of tax returns. So that's going to be actual financial documents that you sent to the IRS, aka the I'm really sorry people. If you notice, by the way, the IRS spells theirs. Learned that from my dad. Anyway, the point is they're gonna take a look at your financial stability overall. It is ideal if you've been in the same industry for at least 2 years in a row. So let's pretend that you are a doctor. And then after 1 year, you decide that you are actually going to be a nurse. Well, they can look at that as the same industry and still pre-approve you and use both years of those incomes. However, if you're a doctor and then you switch to being a photographer, it's going to be a little bit different. They may not be able to use the full 2 years. Another aspect that's really important to get you pre-approved is what's called DTI, which is debt to income. Debt to income ratio is sometimes just as important, if not more important, than how much money you have or how much money you make. Debt to income is every month, how much do you have to pay towards your debt versus how much income do you have coming in. Different lenders have different ratios and percentages that they use to determine how risky this is to lend you the money. So it's really important that you work on your credit score. It's really important that you work on your debt and focus on that just as much as you are building up your income. So an ideal time to get pre-approved is as soon as you can to just have a conversation with a lender. It's completely free to have a consultation and it can prepare you for the future. So whether you're buying in 2 years or 5 years or in 2 months, I would highly encourage you to just have a conversation early to help prepare you for the future. If you want to prepare yourself for the highest possible pre-approval letter, I would recommend that you make sure that you're in your industry for 2 years solidly, that your income is stable, that you're working at least full-time, 40 hours a week consistently would be helpful. And then make sure that your credit score continues to go up by paying your debts off while increasing your income. That's gonna put you in the best position to get the house of your dreams.